Good afternoon. Time to check a look at the markets, and starting off with things in Australia. We did see, of course, that interest rate decision up 50 basis points, and this followed this morning's interest rate decision out of the Reserve Bank of India, moving in the same direction. Nonetheless, markets on that particular front are higher as investors continue to digest those particular news, with the Hong Kong side of things leading the gains up 2.25%. When we look at what's happening in Europe, markets on that front a little bit lower ahead of the ECB decision this afternoon, where policymakers are expected to announce their intention to increase rates in July. Locally here at the JSE did score itself a secondary listing. Australian company Southern Palladium began trading under the ticker SDL. This now brings the total companies listed on the JSE to 313, with an overall market cap of about 20.7 trillion rand. Nonetheless, to talk to us about the latest when it comes to the markets, we are joined by Carmen Pelona, who is from ABSA Asset Management. Carmen, thank you so much for your time. Let's check in on the JSE, given the fact that we're just getting into the trading month of June and following a rather, I suppose, call it a volatile May. How are we doing so far for June and for the trading day so far?
Yeah, so I think volatility will continue for the rest of this month as well, as you've mentioned that we saw in May. Today is marginally down on the JSE, and this is despite Naspers and Prosus, just rallying this morning. So those levels above 8% approximately, but we see a drawdown across all the other sectors, and that's led to the negative movement in the JSE today. I think the overhang is definitely going to come from the global sector for most of the month.
So we had SPAR release their financials earlier this morning, the group slashing its dividend to fund corporate activity. What did you make of their financials?
Yeah, so there's definitely, we know that there's high debt level and debt level issues with SPAR. So that's probably one of the key reasons for pulling back and being prudent in terms of cash generation and utilization thereof. Unfortunately, despite the fact that we did see better numbers coming out of their South African operations as well as the Irish, they did mention that the last 8 weeks of operations in Europe as well as Poland have been negative. So I think that's related to what the share price has done today, so back in negative territory. Having said that, SPAR has pulled back quite significantly over the last 6 months to 1 year. So that's definitely sort of given them a sort of support level, albeit at much lower base for SPAR. We are seeing that they're likely to be losing market share to both ShopRite and as well as to Pick n Pay at home. And so that's where we've seen the negative territory come. I don't think that these results have given enough for the investor market to have faith in a growth going forward. And management has said in their guidance that they remain cautiously optimistic of how things are going to go forward. Inflation will be an overhang for all food retailers, and so SPAR will not be excluded from that. And so unfortunately, disappointing, and that has come through in the pullback in the share price today.
Speaking of inflation, what do you make of comments out of U.S. Treasury Secretary Janet Yellen saying that the U.S. has unacceptable levels on inflation and she does expect it to remain high?
I think more than anything else, what it does say to us is that both Treasury as well as the Fed are aligned in that view. We know the Fed makes the decision in terms of interest rate, and they have been shouting for the longest time that inflation is too high, and obviously taking precautions in terms of how interest rate moves going forward. So I think most of the impact of the comment by Yellen is related to the fact that now they're both aligned, keeping in mind that we are going into midterm arena in November for the US. But what it does say to the consumer is that, Treasury is seeing the pain and the impact thereof. So I think it's something to keep an eye on going forward.
Do you think the Fed's slower implied pace of tightening is an indication that they might actually reach their goals, or it could be, I suppose, a tipping point towards a recession?
So the key thing to remember is volatility reigns, and so does uncertainty. And I think it's more prudent for them to maintain a slow pace. You don't want to get ahead of yourself and then see the economy pulling back too much. So I think that this is the prudent way to do it, to ensure that they don't get themselves into a position where they have now ensured that the economy has pulled back further than what would be expected. So I'm in agreement with the prudent step that's being taken, and then to see how each step actually has an impact on the economy.
On that note, I can imagine the word recession is a word that's discussed amongst your team members. How do you account or even consider a recession when you are applying your investment decisions?
I think, first of all, you don't want to consider it, but it would be remiss not to include it as part of your investment case. Having said that, I don't think the market is pricing in any form of a high probability for recession, both globally and especially here at home. The indicators don't show that it's likely to trend in that direction as yet. But having said that, us as a team, when we do look, we focus on those companies that, number one, have strong balance sheets, and so therefore very low gearing levels, and those that are cash generative positive and strong. I think that in a inflation environment, a rising inflation environment, you've got to focus on those companies that have pricing power, number one, and then able to manage obviously their margins, but also the ability to ensure profitability continues. So those are all at the back of the mind, and waiting for any indicators to say that recession is imminent, and positioning portfolios accordingly.
Carmen, thank you so much for your time. And of course, we will be keeping you updated on that ECB interest rate decision, as well as results coming out of the Foschini Group on Friday. That is it from me. We're going to take a quick break, and when we come back, we'll have more news for you. So stay tuned.